Should you buy the dip in shares of Visa that are down nearly 2% on the heels of reporting their Q3 results? We'll get into everything you need to know from this most recent Q3. We'll also take a look at the upcoming guidance for Q4 and really how that compares to what Wall Street anticipated this one to be at. We'll take a look at all the numbers from revenues, earnings, and the all-important cash flows over at Visa. And then we'll talk about this from a stock chart perspective. Should you buy the dip now that shares of Visa have been declining really over the past year to date, but are still in a long-term uptrend? What do you do if you own shares of this one, and can you add more? As always, we'll look to answer all those questions and a whole lot more. Be sure to hit that like and subscribe button below if you're new to the channel. Hey guys, hope you're doing well out there. It's time to check in with shares of Visa. We only get 4 cracks at this over the course of the year, and Visa is certainly an important one, not just for the overall economy, considering this is more than $500 billion worth of a stock, but also a look into really how your average consumer, not just in North America, but really globally, is handling up. Now, like we said, shares were down 1% on the regular trade and trading down another 2% in the after hours, giving up your year-to-date gains of just around 2%. Over the past 1 year, you're up 11%, not anything crazy out of Visa, and even over the last 5 years, you're up just 46%. So a little bit of underperformance from one of this blue chip growth names that certainly is seeing its growth dwindle, but still continues to post absolutely stellar results. Now, what you have is a revenue miss over at Visa of $8.9 billion. While that was still growth of close to 10%, right around 9.9% growth, it did miss Wall Street expectations by $20 million. And this headline number is what I think is causing shares to be down just around 2% in the after hours, because what I want to show you guys here is the last 16 quarters over at Visa. They have only missed on their revenue guidance, on their revenue print once over the last 16 quarters, and that came in Q3 of 2020. So 4 years later, in Q3 of 2024, they come in with a $20 million miss. And for a company that's really known to beat on revenues and especially beat on earnings, you see over the last 16 quarters, they have not missed earnings for a single quarter. The fact that they came in with a miss on that top line number probably spooks investors just a little bit, considering how consistent this company is on beating those top line figures. In terms of the bottom line non-GAAP EPS, that came in at $2.42. That was exactly in line with what Wall Street was anticipating. They were anticipating $2.42 at the midpoint. The high end was for $2.47, and like we said, Visa comes in with the consistent beats, not just on the top line, but also on the bottom line. You see over the last 16 quarters, they have not come in with an inline figure, and the fact that they came in inline here, again, just on those headline numbers, does spook investors just a little bit. And I think that is what is causing the 2% sell-off in the after hours, because as we go through this print, everything else looks really in line. So just the top line miss over at Visa is, I think, what's enough to cause shares to trade down lower. Now, in terms of everything else over at Visa, it's business as usual. As you had 10% revenue growth, like we talked about, really all their segments, including payments volume, cross-border travel, all those things growing steadily over at Visa in the high single digits. We'll certainly look at that when we get to the statement of income. Now, in terms of guidance for the upcoming Q4, that also came in really in line with what Wall Street had anticipated. So revenue growth for the upcoming Q4 coming in at low double digit. Look, when we take a look at what Wall Street anticipated, they're right around 11.5% on the upcoming Q4, really in line with that low double digit at $9.6 billion. The high end is closer to $9.96 billion. So considering the fact that Visa just came in with a miss on their Q3 revenues, pretty unlikely that they'll come in with this high end. If anything, these revenue estimates for the upcoming quarter might get revised down just fractionally down to 11% on the midpoint. But again, nothing to be overly concerned about. And then when we look at the EPS guidance for the upcoming Q4, they're guiding for the high end of low double digits. So that's really looking close to 14% growth. Wall Street has a number pegged closer to 12%. So again, $2.61 expected for the upcoming Q4, really in line with what Visa is guiding themselves. For the full year, you expect similar numbers at low double digit revenue growth and then low teens diluted EPS growth. And so despite the miss on the top line and the inline bottom line figure that we got from Visa in this most recent Q3, they're really not changing their outlook for the upcoming Q4, for the full year. Probably looking into the next couple of quarters, nothing is changed over at Visa, and you're expecting that low teens growth into perpetuity, probably into the next 1 to 2 years. And so when you apply a roughly 26, 27 times an earnings multiple on a forward basis for this company, it's not looking overly expensive. Certainly their growth rates aren't once what they were, but you're still getting close to low teens growth on that bottom line. You're paying a mid-20s earnings multiple, and then you're still getting basically flat double-digit growth on that top line, and you pay a premium sales because you get tremendous margins from this company, as we'll take a look. So really nothing overly concerning. I think from the guidance, what we just got was a miss on the Q3 top line and inline Q3 on the bottom line, and I think that is what's sending shares down a little bit in the after hours. Now, as we take a look at the income statement, everything looking as expected. You had net revenues come in at $8.9 billion, up 10% year over year. What's even more impressive is how well they controlled the operating expenses on that side. Those were actually down 4% on a year over year basis, coming in at $2.9 billion. So on higher revenue, you had lower operating expenses. What that allowed them to do is bolster on a ton more in bottom line earnings, as that grew at 17%, net income coming in at $4.9 billion, and EPS growing faster at 20%, up to $2.40. That's on a GAAP basis, and then $2.42 on a non-GAAP basis. So this company has that buyback in place, allowing your EPS to grow just faster than your net income. That's what we like to see from a company that generates just tremendous amounts of bottom line earnings. Now, from their key business elements, we can see everything was up year over year. Payments volume up 7% on a constant currency basis. Cross-border excluding intra-Europe up 14%. Cross-border total up 14% as well, and then 10% higher on processed transactions. And look, while some of this is probably due to the fact that inflation has still been there, and so some of your goods and services that you paid for a year ago are just simply more expensive now. And so when people are swiping their Visa debit or credit, yeah, those things are just costing more. And so that allows Visa to generate a little bit more. But I think a lot of this is also still organic growth. The fact that they have more cards in circulation, more people using Visa debit or credit wherever they go, basically moving away from cash. I think that helps their business, and you see that organic growth. Now, in terms of the balance sheets, everything looking as expected. This is a 9-month picture, so not quite year over year, as we have Visa's Q3 on the left-hand side. Cash and cash equivalents dwindling down just a little bit, down to $13 billion, down from 9 months ago. We were closer to $16.3 billion. Looks like our total assets still staying relatively in line, and so some of that cash just moving into investment securities. Probably Visa getting a bit more, closer to 4.5% on a money market fund. Maybe they're putting some of that cash away into those investment securities. From a liabilities perspective, you still have close to $20.6 billion worth of long-term debt, not really dwindling down over the last 9 months. So this company not paying down that debt. But as we look at their cash flows, that $20 billion in debt, nothing to be overly concerned about. You generate close to $13.2 billion in operating cash flows. That's over the last 9 months. Yeah, there's not many companies that do that over the course of basically their lifetime. And Visa is doing $13.2 billion in operating cash flows over 9 months. What's even more impressive is you take away just $1 billion in capex, and you get to $12.3 billion in free cash flows. Again, that's over the 9 months. You annualize this, you're looking at a number close to 16. Give them credit for a bit higher in Q4. You're looking at close to $17 billion in free cash flow for a company that's right around $530 billion in market cap. So you're looking close to a 3% free cash flow yield. Nothing overly concerning. I think this company generates just a ton, an absolute ton in free cash flow, and they put that to good use, as you have nearly $11 billion used in the form of a stock buyback, another $3 billion in terms of dividends, because you do get a close to 0.8% forward yield with shares of Visa. And so when you take a look at that $20 billion in long-term debt, yeah, while that does seem significant, at least compared to their cash position, you see this company generates close to $17 billion in free cash flow over the course of 1 year. And so certainly if they slow the pace of their buyback anytime they want, they can look to pay down that debt really in a quick, short amount of time. So I don't think that debt is to be anything concerned with. As a shareholder, you're seeing nearly dollar for dollar return on your free cash flow, considering the fact that they're returning it all in the form of repurchasing their stock or paying out their dividends. Now, over the past year, call it year and a half, you have seen shares decline in Visa as they're making a pattern of lower highs and lower lows. Right now, you're trending close to the bottom end of this trend line. Call it down to $255. It's probably the bottom of this trend. In the after hours, you're trading down close to $258 a share. And so while in the shorter term, yeah, you are making a pattern of lower highs and lower lows. And so you probably don't want to come in here and buy shares of Visa as it comes closer to this red line. But certainly as it comes closer to this green line we have on the bottom, yeah, you can see a rebound up back to the higher end of this channel, closer to the 270s. So certainly you could look to pick up some shares of Visa at this point. Now, if you want to be a bit more cautious, then certainly you can wait for shares of Visa to settle out maybe closer to the bottom end of this uptrend near, call it $250 on the nose, as you have a nearly 2.5 year uptrend hanging in the balance. As shares of Visa come down, certainly if they break through this downtrend, you have a level of support at $250. You don't want Visa to break through those levels, and certainly that is a point where I could step in and buy shares of Visa. This would be a level where you're seeing shares rebound off a long-term trend line, and if they can continue to make a pattern of higher highs and higher lows at this point, yeah, then your uptrend is certainly intact. I think if we stretch out our chart over a bit longer of a term, I think shares of Visa were certainly due for a pullback, considering this absolute monster rally since August of 2022. We were overextended, and so at one point or another, we were certainly due for a pullback. We are seeing that pullback now in the after hours down to $259 a share. So certainly if you come in here tomorrow and step in and buy shares of Visa, I wouldn't blame anyone, considering the fact that we are near the middle of this channel, closer to the bottom end of it, where you can certainly see some support from shares of Visa. If it breaks through this $250 range, you also do have levels of support here in the 240s, lower in the 230s as well. So I think nothing overly concerning. You also have Visa themselves buying back their shares to the tune of close to $10.8 billion over the last 9 months. So I think that will provide a level of floor on this stock. This remains a high quality name with tremendous gross margins, tremendous operating margins that continues to just control those costs extremely well. You see your operating expenses declining despite growing your revenues. The free cash flow that this company generates remains absolutely tremendous, and while they did come in with a revenue miss and an EPS that was in line and didn't beat, I think there's nothing to be overly concerned with. I think the sell-off can absolutely be bought, as Visa remains a high-quality compounding name that can be a cornerstone really in any portfolio, whether you're overweight tech or not. That was my take on shares of Visa. Let me know your thoughts on this one in the comment section below, one that I continue to hold in my portfolio and have no plans of selling, in fact, possibly adding on this dip. Let me know your thoughts on this one in the comment section below. Stay tuned on the channel as we have more earnings rolling along throughout earnings season. As always, thanks so much for listening, and I'll catch you guys in the next video.